In the ever-evolving world of automobiles, there's a seismic shift happening, and it's electrifying. Imagine a world where electric vehicles aren't just a niche market but are competing head-to-head with traditional gasoline-powered cars. Well, that future might be closer than you think. Today, we're diving deep into a groundbreaking development in the EV industry. So, buckle up and let's get charged. Okay, let's take a look at the news. The Tesla Model 3 has achieved a remarkable milestone by becoming the first electric vehicle to break into the top 10 leased models in the United States. This isn't just a minor achievement, it's a testament to the growing acceptance and demand for electric vehicles in the mainstream market. In the second quarter of this year, the Model 3 secured the 7th position, accounting for 1.79% of new vehicle leases. To put this into perspective, a whopping 25% of the 42,000 new Tesla Model 3s that hit the US roads last quarter were leased. This is a significant jump from the previous year, where only about 16% of new Model 3s were leased. Now, why is this significant for stock investors? The surge in leasing rates indicates a broader acceptance of EVs, and specifically the Model 3. When consumers opt to lease, it often reflects their desire to try out a product without the long-term commitment of purchasing. This uptick in leasing suggests that more consumers are willing to give electric vehicles, especially the Model 3, a chance. But there's more to this story. The overall EV leasing rate for the second quarter stood at about 21.2%, with the Model 3 lease rate surpassing this average. This is intriguing because the top 10 leased vehicles list is typically dominated by high-volume cars and trucks, like the Ford F-150 and Honda CR-V. The Model 3's entry into this list showcases its growing popularity and the shifting dynamics of the automotive market. A key driver behind this trend could be the federal tax credits available for EVs. Due to an Inflation Reduction Act loophole, a wider range of EV models have become eligible for these credits when leased. Interestingly, the Model 3 stands out as it's also eligible for the buyer's tax credit, allowing buyers to benefit from the full $7,500 credit when purchasing the vehicle outright. Melinda Zabritsky, experienced Senior Director of Automotive Financial Solutions, offers another perspective. She believes that the Model 3's popularity among lease buyers might be influenced by Tesla's price cuts and its dominance in the US EV segment. With the rapid changes and influx of new models in the EV space, leasing provides consumers with the flexibility to experience the latest without long-term ownership concerns. However, it's essential to note that while the Model 3's leasing rate has seen a surge, the overall leasing trend in the US has witnessed a decline since 2018 and 2019, when it was above 30%. This makes the Model 3's achievement even more commendable. In terms of stock value, this news paints a promising picture for Tesla. The increasing demand for Model 3, combined with its unique position in the leasing market, suggests a positive trajectory for the company's stock. As more consumers lean towards EVs and as Tesla continues to dominate the market, we can anticipate a potential rise in the stock's value. Alright, folks, that wraps up our deep dive into this electrifying news. If you found this analysis insightful, do us a favor and hit that like button. It helps get this video more visibility. And if you haven't already, subscribe and drop a comment saying you did, and we'll be sure to respond. We'd love to hear your thoughts on this development. Do you think the rise in EV leasing will continue? Share your opinions below. And don't forget to check out our daily EV stocks pre-market report, where we provide target numbers for over 20 EV-related stocks every day. Until next time, stay charged and informed.